One of the distinguishing features of Parag Parekh FlexiCap Fund is its allocation to overseas equities. This has allowed the fund's investors to benefit from overseas diversification with a domestic equity fund. However, the fund's equity allocation has been falling thanks to the RBI's curbs on overseas investments by mutual funds. Due to RBI cuts, of the 67 international funds and FOFs available in India, as many as 37 have stopped accepting fresh investments. These include popular funds such as Motilal Oswal Nasdaq 100 FOF, Motilal Oswal S&P 500 Index Fund, ICICI Prudential US Blue Chip Equity Fund, Mirae Asset NSE FANG plus ETF FOF, etc. Now this seriously limits the overseas investment options available to Indian investors. And amid this, many overseas markets continue to do well as compared to the Indian markets. Now coupled with this is the rupee's depreciation against other currencies, which can act as a top-up to these returns. So if you're someone who wants to invest in overseas markets, how can you do so? A gift to such investors is the IFC at GIFT City. Hello and welcome to ET Money's YouTube channel. Until now, the IFSC at GIFT City was seen as an avenue to invest in overseas stocks. But now, with the launch of DSP Global Equity Fund, it's useful for fund investors too. What's more, multiple fund houses are planning to launch international funds from IFSC for Indian retail investors. So in this video, we'll talk about investment in overseas funds via IFSC. But if you're not sure what the IFSC at GIFT City is, let me give you a quick introduction to it. First, what is GIFT City? Well, GIFT City or Gujarat International Finance Tech City is a smart city in Gujarat. It is located on the banks of the Sabarmati River and lies between Ahmedabad and Gandhinagar. GIFT City is developed as global financial and technological hub to provide world-class infrastructure and business services including banking, capital markets, insurance, fintech and IT services. Businesses operating out of GIFT City enjoy attractive tax benefits including 100% income tax exemption for 10 years. Now, GIFT City consists of a multi-service special economic zone for overseas businesses and a domestic tariff area. Now, the multi-service SEZ includes an IFSC or an International Financial Services Center. The IFSC is designed to provide world-class infrastructure and services for financial institutions and investors, including Indian residents, NRIs, and foreign entities. Now, it has a unified regulator, the International Financial Services Center Authority or IFSCA, which has powers of the RBI, SEBI, PFRDA, and IRDA vested in it. Now, the IFSC ecosystem consists of international stock exchanges, banking units, brokers, insurers, and ancillary services. Put simply, GIFT City is a smart city meant to act as a global financial and technological hub, and IFSC is a dedicated financial hub with it. Next, let's talk about investing in overseas funds via GIFT City IFSC. But before that, here's something important. You can now get cash to enjoy your present while staying invested for your future with loans against mutual funds on the ET Money app. The interest rate is just 10.75% and there is no fixed EMI. Pay interest monthly and repay the principal amount whenever it is convenient for you. Plus, there is no need for a CIBIL score. So go ahead, check your eligible limit on the ET Money app now. There are 177 fund management entities or FMEs at IFSC with 272 schemes registered and $22 billion commitments raised. But until recently, there wasn't any overseas fund available for Indian retail investors. In June this year, DSP Global Equity Fund was launched. Now, DSP Global Equity Fund invests in companies across the globe. It is benchmarked to the MSCI ACWI Index. ACWI stands for All Country World Index. This index has 3,000 stocks from across 23 developed and 24 emerging markets. But DSP Global Equity Fund focuses on 400 to 450 large companies of this index, which are over $30 billion in market cap. So this is not a restrictive criteria. The fund just holds 30 to 50 stocks, so it distills its universe quite thoroughly. Now, the fund's core exposure is in the companies in the US, EU, Japan, Hong Kong, and South Korea. However, it's not averse to investing in the companies of developing countries. As briefly mentioned at the start of this video, multiple fund houses are planning to launch their international funds from GIFT City. Mirae Asset Investment Managers plan to launch its overseas fund from the IFSC within a few months, with Tata Asset Management has filed the approval with the IFSCA. Now, in addition to these, 3 more fund houses have reportedly been considering launching their retail-oriented overseas funds from GIFT City. But what will it take to invest in these schemes? Let's see next. Let's take a look at DSP Global Equity Fund to get an idea of the investment requirements of overseas funds in IFSC. Like domestic funds, DSP Global Equity Fund also offers 2 investment modes, regular or Class A and direct or Class B. But both have the same minimum initial subscription and additional subscription amounts of $5,000 or above and $500 respectively. Now $5,000 is about 4.42 lakh and $500 is about 44,000. The regular variant of the fund has an expense ratio of 1.75%. It stands at 1% for the direct variant. Now, the maximum investment limit in the fund in a financial year is $250,000 or the maximum limit under the LRS. Now, LRS stands for Liberalized Remittance Scheme. Under this scheme, one can transfer up to $250,000 in a financial year for certain permitted transactions, including overseas education, travel, medical treatment, investment in stocks, mutual funds, debt instruments, etc. That's over 2.2 crores and would suffice for most retail investors. So, as an investor, you can expect international funds at IFSC to have a certain minimum investment threshold. Now, this threshold is certainly much higher than that of domestic funds, but that's because investing overseas entails overheads such as currency conversion cost and transaction charges, which can eat up significant chunk if the investment amounts are small. However, the minimum investment amount of 4.5 lakh is not too high to be out of reach for retail investors. Next, let's talk about the process involved in investing in international funds from IFSC. Again, let's take a look at the process established by DSP Global Equity Fund to get insights into the investment process for overseas funds at the IFSC. There are broadly 2 steps to the investment process: creating a zero folio with DSP IFSC and transferring funds to the Global Equity Fund. Now, to create a zero folio, you need to download the application from DSP IFSC's website. You will need to fill out the form and mail it to DSP IFSC. This form will then be reviewed by CAMS and a zero folio will be created in T+2 days from the time of receiving correct documentation. After the zero folio has been created, you can remit the funds to DSP IFSC through your bank website, or you can visit your bank branch to do so. Now, this suggests that the current process to start investing in an international fund from IFSC is a mix of online and offline steps. As of now, the process is not completely online, but that will change soon as we will be launching an ability to invest in them completely online soon. Now, what happens suppose the investment has been done? Unit allocation typically happens in T+1 days from remittance and confirmation receipt, and the cutoff time is 12 p.m. And what about redemptions? Well, on redemption, the proceeds are paid into the investor's designated account. Redemption is processed in 7 business days and the proceeds are net of taxes, fees, transaction cost and other charges. Now, for partial redemptions, if the value of the remaining investment falls below $1,000, the fund house may redeem all units. Now, do note that the fund also has an exit lot of 1% for redemptions made before 24 months of investment. Now, the timelines involved suggest the account opening, unit allocation and redemptions are done quite swiftly, and you can expect to get a similar experience as you do with normal international funds. Next, let's take a look at the taxation of the units of international funds at GIFT IFSC. Let's see how DSP Global Equity Fund is taxed to understand the taxation of overseas funds at the IFSC. Now, it may come to you as a surprise, but there is no tax to be paid by the investor on the gains booked in DSP Global Equity Fund. Now, this is not to suggest the fund is tax-free. Rather, the tax is paid at the fund level. At 43%, the tax rate is really steep if the fund sells its holdings at a gain within 2 years of purchase. Even dividends received by the fund are taxed at 36%. It is yet to be seen whether other international funds and IFSC will also follow a similar taxation regime or something else. But looking at the taxation of DSP Global Equity Fund, one thing is certain. The taxation framework is so constructed that it promotes long-term investment at the fund level. Secondly, by keeping the proceeds tax-free in the hands of the investor, the effort has been made to keep things simple and encourage investing in overseas funds via IFSC. Now, handling the taxation of overseas investments can be a hassle for the average investor, and thus this tax regime does help solve that problem. Now, apart from this, as per LRS rules, if you remit more than 10 lakh rupees in a financial year to the fund, the exceeding amount is subject to a TCS or tax collected at source of 20%. TCS is not a tax outgo itself, and you can adjust it against your outstanding tax or claim a refund at the time of filing a return. Alright, let's conclude the video with our view on investing in overseas funds via GIFT IFSC. The RBI's limit of overseas investments by mutual funds stands at $7 billion. An additional $1 billion limit is available for investments via overseas ETFs. These limits were set way back in 2008, and since then they have not been revised. Now both of these limits are now nearly exhausted. This has resulted in many international funds being unavailable for investment. Of course, one can buy the units of international ETFs available in India, but since they are also not able to create fresh units, it's the same units that are changing hands. Now, given the limited supply, the prices of these ETFs units tend to deviate from the underlying NAV, and hence an ETF can trade at a steep premium to its NAV. This means you may have to pay more than the actual value of the unit of the ETF. Now, amid this, international diversification has continued to gain importance. The IFSC at GIFT City is a worthy option to invest in overseas funds. It allows you to invest overseas via entities that are registered in India and regulated by an Indian authority, thus offering familiarity of location and jurisdiction. The taxation overseas funds in IFSC can be a big plus for retail investors, as seen in the case of DSP Global Equity Fund. KYC, unit allocation and redemption are processed reasonably swiftly. Now, the hidden advantage is that you can gain exposure to multiple countries and currencies by investing in just one fund via just one currency, as we saw in the case of DSP Global Equity Fund. But the investment options are quite limited at the moment. There is just one fund available for investments, and which is DSP Global Equity Fund. Fortunately, multiple fund houses are planning to launch their overseas funds from the IFSC over the next few months. This will expand the options available to Indian investors. However, these funds will likely have a minimum ticket size of a few lakh rupees. Along with this, the investor also has to bear the currency conversion and bank transfer charges. Now, as of now, the investment process may not be entirely online, and this can be a minor hassle. Overall, overseas funds at GIFT IFSC are a promising option, though they do require extra legwork as compared to domestic funds. Now, do let us know in the comment section if you'd like to invest in overseas funds at IFSC. And with this, I have come to the end of this video. I hope you found it useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.